General Motors facility in Oshawa, Ontario, is the latest Canadian auto plant to feel the effect of U.S. tariffs.
Amazon, Jeff Bezos. Sources telling CNN that the president at one point wasn't happy earlier today.
Something big just happened between the United States and Canada. Canada has signed new trade deals worth $214 billion. These deals are pulling major trade partners away from the U.S. While President Trump is raising tariffs and isolating the U.S. from global trade, Canada is doing the opposite. Canada is forming new partnerships and becoming a bigger player in the global economy. In this video, we'll break down what this means for both countries. We'll look at which industries are most affected and what could happen next. If you care about the economy or international news, this is a video you don't want to miss. Don't forget to like, subscribe, and turn on notifications to stay up to date. For many years, Canada and the US were strong trade partners. About 75% of Canadian exports went to the United States. This close trade relationship worked because the countries were neighbors, shared similar values, and had strong historical ties. But everything started to change in 2023. When Donald Trump returned to office, his administration increased tariffs on Canadian goods. Tariffs on steel, aluminum, and automobiles went from 25% to 50%. This was a big shock for Canada. It made it much more expensive for Canadian companies to sell their products in the US. Prime Minister Mark Carney made a bold statement in Washington, saying the old trade rules were now over. At first, companies tried to manage. But as tariffs went up, so did prices. Canadian suppliers told US companies that costs would double. This was not just a warning, it was already happening. Then there were rumors that the US might target Canada's energy exports next. Since Canada is an important supplier of oil and gas to the US, this made many people very nervous. Canadian companies began to ask a serious question: what comes next? Many of them decided they couldn't rely on the US anymore. Instead of waiting for more problems, Canada acted. It began building new partnerships outside North America. At the end of 2024, Canada signed a major trade agreement with Indonesia. Indonesia has over 280 million people. This deal removed 90% of tariffs and covered key areas like electronics and mining. Canada also announced a $2.3 billion Indo-Pacific strategy. This was a clear sign that Canada planned to stay in the region for the long term. At the same time, US businesses were struggling. Farmers, manufacturers, and consumers all felt the pressure of high tariffs. Business leaders in many US states started sending letters to Washington. They warned that tariffs were raising prices and hurting sales. Car companies said prices would rise by thousands of dollars. Farmers worried about losing access to the Canadian market. Steel prices were going up fast, and factory workers feared for their jobs. Even with all this pressure, the US government did not change course. Trump stayed firm on his tariff policy. Meanwhile, Canada offered something very different. It promised stability and clear trade rules. Canada started calling itself a safe and predictable market. Foreign investors liked this message. They didn't want to deal with the uncertainty coming from the US. As a result, investment in Canada grew by 9%, while investment in the US dropped by 28%. Many companies chose to build new factories or research centers in Canada. Instead of the US, Canada also expanded deals with other major players like the European Union, Japan, India, and Australia. The biggest turning point was Canada's new $214 billion trade deal. This deal included several Asian and Latin American countries. It focused on many industries, including technology, resources, and clean energy. Experts say this agreement could weaken the US's influence in global trade. It is one of the biggest trade moves of the decade. Instead of strengthening the US economy, tariffs are now pushing away partners and hurting local buyers. President Trump says that tariffs will help American companies by protecting local jobs. But many people now question this strategy. Rising costs are hurting both businesses and consumers. Prices for cars, groceries, and energy are going up. Some businesses are looking at moving production from Canada to Mexico. But even in Mexico, new trade tensions are growing. The trade war is spreading, and the US is starting to look isolated. Canada's economy is still growing, with exports increasing by 2.6%. In the US, export growth is just 1%. Canada is working with European and Asian countries in sectors like critical minerals, artificial intelligence, and advanced manufacturing. The country is becoming more independent. For years, Canada depended heavily on U.S. trade, but now things are changing fast. Some U.S. companies are asking why their government is pushing partners away. Canadian officials say they are building bridges while the U.S. builds walls. It's too early to say who will win in the long run. Some people believe U.S. industries may benefit in the short term, but in the long run, losing trade partners could hurt the U.S. economy badly. Big companies need stable trade rules to build supply chains and invest in new projects. When policies change too often, they look for other options. That's why Canada's message of predictability is working. Companies want to plan for the future, not guess what will happen next. The U.S. is pulling back, but Canada is stepping forward. And that $214 billion deal proves it. Canada is creating new opportunities while the U.S. builds barriers. So what do you think? Did Trump make the right call? Or is Canada outsmarting the U.S. on the global stage? Let us know your thoughts in the comments. Don't forget to like, subscribe, and turn on notifications so you don't miss future videos. Thanks for watching.